All right, hello everyone, and thank you so much for joining us for this urgent summit. I'm here with Jim Rickards to discuss the impact of the coronavirus and what it will have in terms of its impact on the economy and the markets, what you should expect next, and how you should prepare. And this is urgent, obviously, because if you've been watching it all, markets have been very volatile. And over the last few days, many investors, frankly, have panicked, like we probably haven't seen since the crash of 2008. It's hard to blame them if you look at some of the recent headlines. I don't know if I can throw these up here, but I'm going to read off some of these headlines. Dow plunges 2,300 points, stocks in meltdown as panic selling continues. Here's another headline. Dow endures worst day since Black Monday. S&P enters bear market as coronavirus spreads economic gloom. And then here's one more. It says, a short, sharp global recession is starting to look inevitable, right? So look, these headlines are pretty scary. So we're here to get some answers from Jim Rickards. Are the markets overreacting, or are things about to get a lot worse? Should you be buying stocks right now, or should you prepare for more downside? What are the safe havens at the moment? How can you protect your wealth? What will be the ultimate impact on the economy? And could this influence even the results of our 2020 election? We're all about to find out from Jim Rickards, and we're going to talk about the specific crash strategy that he's been publishing for a while now that can take advantage of all this volatility. It's going to be very interesting. Jim, I want to start by saying that, we have a lot of conversations off camera and behind the scenes here, and you were one of the first people who predicted this would get a lot worse. I'm going to actually put an email up on the screen right now. It's an email you sent us probably more than a month ago. So in this email, you were warning me, our internal team, that things were likely going to get a lot worse. I'm going to read one section in particular. You said, the real infection rate and death count may be 10 times the official statistics. If you want to see how bad things can get, study the Spanish flu pandemic of 1918 to 1920. There were over 50 million dead. So Jim, you sent this email on February 5th. Again, that's more than a month ago, when the markets really didn't think this coronavirus was going to be a big deal. So how did you know this would get worse back in February?
Well, I did send that email, Peter, and also sent a few warnings on Twitter and elsewhere. And I was saying that this would get a lot worse. Basically, using the same methods that we always use, are Bayesian statistics, getting as much information as we can. But the main tool that I was using for what you're describing, we're based in Baltimore, and of course we have Johns Hopkins University, one of a number of very fine schools in medicine and public health. But Johns Hopkins created a dashboard. Really in January, they knew that this was going to be a global pandemic. Maybe no one knew exactly how bad it would get, but they knew it was bad enough that it was worth tracking. Brilliant graphics, brilliant data. And it's all over the world. So we, of course, care about our neighborhood or our state or our locality. Are we in a hotspot, et cetera? But this was spreading all over the world. It's clearly going to have a global impact. Well, what this allowed you to do as a tool, you could look at Iran. You could look at Italy. You could look at China. Most of the focus has been on China, of course, and watch it on a not just a daily basis, but they would update every couple hours based on the best available information. Of course, we're all about trends. You don't just look at the snapshot. You don't just look at where you are. You look at the trend. And what I was seeing, a couple things. Number one, Italy would start out with, 500 cases, but the next day it would be 1,000. I was like, wait a second, that doubled overnight. Now, 1,000 seems small compared to 80,000 in China, and it was relatively small. But when you looked at that trend, you said that's going to get a lot higher. And today it's approaching 30,000 cases and sadly over 2,000 dead. So when you saw that, you said, well, okay, the United States is only a couple hundred, which it was at the time. If Italy went from hundreds to thousands and the U.S. is at 100 or so, we're going to get to 1,000. We're not immune from this. We have a great public health system, but this is just going to go from country to country. And there was specific information on Iran. Iran's kind of a no-go zone. It's hard to trust the regime, and it's hard to get really good on-the-ground information. But there was a lot of anecdotal information involving just the number of burials and the number of people dropping dead. And I saw one very interesting statistical study. It showed, and this happened, the number 2 person in Iran next to the leader, the Ayatollah Khamenei, died of coronavirus. The head of what we would call the HHS, or Health and Human Services in the United States, or the Centers for Disease Control in Iran, died of coronavirus. 39 members of parliament tested positive for coronavirus. And the statistician said, well, wait a second. You have a population of 70 million people. You have a couple hundred people in your parliament. 39 of them test positive. What are the odds that that's true if you only have 9,000 cases? And the answer is it's impossible. They would have to be the unluckiest people on earth. So kind of reverse engineering that, you could say they had far more than that. So my point is, so I was watching this, but I was also watching the stock market. And the stock market at the time, the problem with doing forecasting is when the forecast comes true, everyone looks back and says, oh, everybody knew that. Well, everybody didn't know that. That's not the case. The stock market was doing okay up until that point, but it was based in part on the Chinese data getting better, which slowly it was getting better, even though it was getting worse elsewhere. And I said, wait a second. The stock market is maintaining its strength and doing a little better based on Chinese data. But everyone agrees the Chinese data is false. Everybody knew the Chinese were lying. Everybody knew that wasn't good data. So I asked rhetorically, which is it? If the data is accurate, then the stock market's doing the right thing. But if the data is a lie, which it was, then the stock market is way overpriced and it's heading for a fall. And we called that, and we were exactly right. So my point is, we don't have a crystal ball. We're not smarter than everybody else. We're smart enough, but you don't have to claim more IQ points. What you do need is a better method. You do need good grounding in statistics and epidemiology. Actually, it's funny. There's a reason they call financial panic contagion. You've all heard the expression, there's contagion in the markets. Bear Stearns has fallen and Fannie Mae has fallen. And, when companies fall sequentially, as they did in 2008, it's just like a virus spreading from neighbor to neighbor. Well, guess what? The mathematics of epidemiology and financial collapse are identical, the same functions. And so understand epidemiology, understand those models, bring it over to capital markets, take the data you've got, project ahead using tried and true techniques, and you can make these kinds of calls. And that's exactly what we did.
Right. You were referencing the market, and I want to get to that market impact in just a moment. But first, I know you've been to Wuhan, the center of the disease, right? Can you talk about that? Because at some point, there were controversial rumors that coronavirus may have leaked from a military bioweapons lab in Wuhan. There's a lot of debate about whether that's fake news or it's true. But what are the implications if that's true?
Well, the implications are huge. First of all, when this thing, ground zero was Wuhan, that's where it started to spread. By the way, it's a city of 11 million people. What's interesting about China, my younger son went to China, some years ago on working on a project, a charitable project, and he was going to a city I'd never heard of. And so, of course, I looked it up, and it was the 35th largest city in China. So I said, well, 35th largest city, well, they have like 800,000 people. No, they had 5 million people. That gives you an idea of how big cities are. But Wuhan is not by no means the biggest city in China, but it has 11 million people, and they locked it down. But when this first started to spread, really in January, and then it kind of caught on in February, people said, where's Wuhan? Well, I've actually been there. It was some years ago. I was on I was touring around China, and I was going up on the Yangtze River exploration. But and Wuhan's one of the major embarkation points. But when I was there, I was kind of tired of the food that they were giving us on the vessel. So I actually went out in the streets and the alleys of Wuhan and walked around and found a street vendor who was selling dim sum with chili oil. I love dim sum. I'm not quite sure what was in it, but I ate it. It was delicious. And so I kind of got the feel of the place. It's a big city. It doesn't have any great historical significance or landmarks. It's not like going to the Eiffel Tower or the Colosseum in Rome, but it's a huge city. It's an industrial center. It's an important city because it's on the Yangtze River, which is completely navigable up to that point and beyond. So I had a very good sense of how big this place was. And when I heard it was locked down, I was like, how do you even do that? Well, the answer is they did it with the military and a lot of other resources. But as far as the fact that this might have come from a bioweapons program, can you prove that? No, not exactly. But there is a very, very strong possibility of that. And here, we need to use a lot of techniques that I learned in the intelligence community. And just to kind of be specific, Wuhan is the location of the main Chinese biological weapons laboratory, biological warfare. It's based in Wuhan. Wuhan is the city where this outbreak occurred. Now, by itself, those two data points don't prove anything, but right away you can draw a strong inference. What are the odds that the city where the disease broke out is the same city where they have their biological weapons laboratory? Again, you have to begin by connecting those dots. But there's more to it than that. Number one, they've never told us who patient zero is. They came up with a story that somebody went to what they call wet market. Wet market is a euphemism for raw wild animals. They eat bats. They eat something looks like an armadillo. They eat rats actually in China, and you can go same way we would go buy hamburger or chicken. You can go buy a dead bat. And they call this the wet market. Well, it turns out that patient zero, to the extent we've been able to get information, never went to the wet market. Number one. Number two, the genome, that was the DNA sequence. Now the Chinese did release it, and scientists are looking at it, and they're racing furiously to come up with a vaccine, and hopefully we'll have a vaccine sooner than later. But they've identified certain sequences on the genome, on the DNA, that do not appear in nature. So is it possible this is some kind of a mutation? Yeah, it's possible. But again, what are the odds that it's a mutation versus the odds that it's actually genetically engineered? And then finally, the head of this Wuhan laboratory that I described spent 10 years at the University of North Carolina working on, guess what, coronavirus. In other words, he was a researcher, not a weapons scientist per se, but he was a researcher at the University of North Carolina working on varieties of coronavirus doing gene sequencing. He then leaves North Carolina, goes to China, becomes the head of the weapons laboratory, and that's where the disease breaks out, and there's a gene sequence that's never been seen in nature. Now, those are all facts. Together, do they prove that this came out of the weapons laboratory? Not quite, but if you do the conditional probability, say what are the odds that all four of those things are true, and this didn't come from the lab? Well, it's a long shot. So this is not a conspiracy theory. We don't quite have the smoking gun evidence, but based on the spread, based on the impact, based on the fact. But let me put it slightly differently. If you were designing a biological weapon, wouldn't you design one that's never been seen in nature, so it would be hard to fight? Wouldn't you design one that spreads in ways that we don't even understand, so it would be hard to take preventive measures? Wouldn't it be highly fatal, 10 times more fatal than normal flu? Yeah, it would be all of those things, and that's what this is. So there's a very, very strong inference and a strong possibility. And by the way, now that people are pointing to this, and certainly I am in this interview, and others are as well, the Chinese are getting highly defensive. They're alleging, the Chinese propaganda machine are alleging that this is a U.S. bioweapon that we created and we released in Wuhan. Oh, interesting. Why Wuhan, which is where their bioweapons laboratory is located? They're taking a very defensive posture, and they've got the propaganda machine cranked up to 10 on a scale of 10. Well, that tells me they have something to hide. And we know the Chinese lie about everything. I can go back to 1994. Exchange rates, World Trade Organization, IMF, every multilateral institution they've been involved with, they've lied to get in and then continue to lie and break the rules after they're in. So I don't trust the Chinese. I don't think anyone should. And there's just a lot of evidence pointing in the direction of the fact that this did come from their weapons laboratory, even though we can't quite prove it, but we do need to leave that on the table. That's bad news because, in other words, if it were normal mutation, maybe a normal vaccine sequence or process would be fruitful. But if it's not just a natural mutation, if this is a weapon, then why would you design a weapon that doesn't work? You wouldn't. You design one that works very effectively, which means this is going to be harder to fight and harder to contain than we realize right now. And that goes back to what I said earlier. You didn't have to see 20,000 affected in the United States. You could see 200 infected and know it was going to 20,000 based on what happened in Iran and Italy.
So let's talk a little bit more about that, right? We all know that viruses don't spread linearly. They spread exponentially. According to several epidemiological studies, we can expect to see a doubling of cases every 6 days. If that's true, that means we could be looking at about 1 million U.S. cases by the end of April. How fast do you think this could spread?
Well, I don't think 1 million is a stretch. And again, we have data. I'm just going to call up the Johns Hopkins dashboard that I referred to earlier. So right now, as we're doing this event, We have 2,158 deaths in Italy, and Italy has 27,980 cases. But that's up from a couple hundred not that long ago. And so this is doubling at a very rapid rate. And by the way, an interesting thing happened a couple days ago. The way Johns Hopkins set up this dashboard, they had a line, a graph, showing the cases in China, and then they had a graph showing the cases in the rest of the world. But the rest of the world was sort of a footnote at the time they started it. China dominated. China had tens of thousands of cases, and the entire rest of the world was numbered in the hundreds. Well, guess what? A couple of days ago, the number of cases outside of China surpassed the number of cases in China. China may have been where this started. It is where it started, but it's no longer ground zero. You have 81,000 cases in China, but just kind of going down the list, almost, I'll use round numbers, almost 30,000 in Italy, 15,000 in Iran. By the way, that the Iranian number is almost certainly an understatement. Make that perhaps even 10 times higher, according to some data I've seen. 11,000 in Spain, 8,000 in Germany, almost 7,000 in France. The United States is up to 5,000. But remember, it wasn't that long ago that some of these other countries were 5,000, and now they're 4 times that. So if you say, what would I expect? I would say, yeah, this is going to spread. And by the way, the government has said this. The United States government is not covering this up. They don't want to cause a panic, and we don't want to cause a panic. But the best cure for panic is truth. The best cure for panic is good data and a realistic appraisal of what's happening. And there are a lot of unknowns. I don't want to pretend to know more than we do. One of the problems when you say how fast could it spread, well, again, we know the math. We can do that. But scientists don't know how it spreads. Now, they started out, with what they call droplets. If somebody sneezes and you're in proximity and you come in contact with that, okay, that's one way to get it. But what if someone touches a doorknob or a handrail, and you come along 5 hours later and you touch the same doorknob or handrail? Is the virus still there? Well, 4 hours, it seems the answer is yes. What about 10 hours? What about the next day? They're not quite sure. And most dangerous of all, can this be suspended in the air? Can you, as an affected person, whether it's through sneezing or anything else, get this virus in the air, and can it hang there for some period of time until someone comes along and contracts the virus? It appears the answer is yes. Again, I don't want to be more definitive than the science allows, but if that's true, and again, there's some evidence that it is true, then this thing is nowhere near contained. We're doing the best we can. I'm not criticizing public health officials, but this has recently been described as an invisible enemy, and I think that's the right way to think about it. We're being invaded or attacked by a virus, and we don't know all the behaviors. Again, going back to the weapons aspect of it, everything I just talked about is consistent with the idea that this is a weapon and not just a normal mutation. So could you have 1 million U.S. cases by the end of April? Yeah, we have 330 million people in the United States. That would only be, about 1/3 of 1%. And it could be worse than that, sad to say.
Given all that, you even hear the warlike rhetoric, almost, that this is a war on the virus. We need to take actions, and governments around the world are already taking measures to try to slow down the virus. Right? Italy has placed its entire national territory under quarantine. Trump suspended travel from Europe to the U.S. and vice versa, declared a national emergency. New York's banned large gatherings. You're seeing businesses, cities, schools, companies all across the country, right, preparing for potential shutdowns, or they have shut down. How do you think this will play out? And more importantly, what will be that play out's impact on the economy?
Well, the impact on the economy will be huge, and I'm sure our viewers and listeners are seeing that in their own lives. I mean, they've already, depending on where you live, either your school district is closed, all public amenities, restaurants, bars, movie theaters, concerts have been shut down, sports shut down. So a lot of this is already out there. But when you talk about, okay, what's the impact on the economy? Well, if the restaurant's closed, you're not selling any meals. If the sports arena's closed, you're not selling any souvenirs or tickets, et cetera. And so it is enormous. It really very hard to overstate. This would be a huge impact on the economy in many ways we can't even explain. So first of all, we can explain them, but can't quite quantify at this stage. So the airline industry is down well over 50%. And we may be getting closer to 100%, meaning they're just going to shut down domestic air travel. Same thing with trains and buses and other means of transportation. Hotels are empty. As I say, restaurants are closed. Et cetera. And then that has ripple effects. So if you close the restaurant, let's say you're a small business owner, you have a restaurant, you have 25 employees, you have no customers, or you're closed. What do you do with the employees? Well, you might keep them on for a week or so, but you're going to lay off those employees. Now those people are unemployed. They're not getting a paycheck. They can't afford childcare. They're not going out to whatever's left. They can't even shop online because they don't have the money to pay their credit cards. And then it has bigger. Those are important because they affect individuals, but there are bigger impacts coming from the supply chain. So when this started, it was in China. Well, you have a lot of manufacturers, a lot of plants in the United States that couldn't get parts from China. They buy stuff from China, and then they put it into their own manufacturing processes in the United States. Well, if you couldn't get the parts from China, you had to shut down your assembly line in the United States because you didn't have the part you needed to keep going. Well, now what's happening is that China is starting to reopen a little bit. I don't want to overstate that, but they've got a handle on this, so they're starting to say, okay, anyone who doesn't have symptoms, come back to work. Let's get the assembly lines moving. But now the shoe's on the other foot, which is the U.S. is shutting down, and not just the U.S., but Europe. Germany has closed their borders. Canada has closed their borders to all but Americans. France, Spain, the other countries I mentioned, one by one, they're closing their borders. They don't care what the EU treaties say. They're looking out. Trump always said America first. Well, all of a sudden it's Spain first and Germany first and France first, and every country is doing what they need to do. Well, when you shut down, so even if China's back in business, which they're not quite, but they're getting there, now all of a sudden you have a demand shock. It's like, well, fine, you can make the part, but we don't want it. We're shutting down ourselves for our own reasons because of our own rate of infection. So it starts out China can't deliver, and our plants are shutting down. Now China says we can deliver, but we're like, well, we don't want it because we're shutting down for other reasons. So this is economists have described it as the first ever demand shock and supply shock. Now, so what's a supply shock? Well, we had that in the 1970s when the Arab oil embargo, the Arabs cut off, or OPEC cut off oil deliveries to the United States, and all of a sudden our economy went into a very severe recession because we couldn't get oil, we couldn't get gasoline. There were gas lines, I remember them. The price of gas skyrocketed, and you couldn't get it anyway. That's a supply shock where you can't get what you need. A demand shock is when maybe you can get it, but nobody wants it because unemployment is too high. We saw something like that in the 2008 financial crisis. Well, what happens when you have a supply shock? People can't deliver because they're shut down, and a demand shock where people aren't buying anything because they're staying home. We've never seen that before, but we're seeing it now. So the impact on the economy will be huge. If there's a little bit of good news in all this, again, I'd use good news in a qualified way. It may be, and this is a maybe, this is not for sure, it may be that most of the impact will be in March and April. Now, the president said this could stretch on until August, and he's probably right about that. But the impact is concentrated. So you may end up where the first quarter, we had a very strong January. Data for January looks good. Data for February looks pretty good. The virus started to have an impact then, but the economy held up. March will be awful. We obviously don't have the March data yet. April will be awful. But maybe by May and June, it'll get a little bit better. So if the worst the worst months are March and April, just through a quirk of the calendar, March falls into the first quarter, April falls into the second quarter. So maybe the first quarter and the second quarter will have kind of zero growth or 1% growth or something like that, and we'll just narrowly dodge a bullet, avoid a recession because not because it's not bad, but because of the quirk of the calendar. But I wouldn't count on that. I think March first quarter growth will be around zero, and second quarter growth will be negative. We'll see, when all the data comes in. But this is awful, and everything I just said sort of, the good news part of it sort of depends on things kind of getting back to normal by May or June when the good weather comes. Hopefully that will stop the spread of the virus. But we don't know that. Again, there is no immunity to this, and there is no vaccine. There won't be a vaccine until early 2021 at the earliest, even when you get rid of all the red tape and green light the process and accelerate the process. You still have to do clinical trials, and that we won't have anything until early 2021 if we get there. Um, we're counting on the warm weather, but what if it does? What if the warm weather doesn't make a difference? What if the fact that we're not immune, and this is a new virus, and the fact that it may have been bioengineered in a weapons laboratory, what if that means that the warm weather doesn't change the impact? Now we're dragging on into the fall, and this will get much, much worse.
So, given that impact to the economy you just described, you see the Fed responding, right? I think they're going to inject something like $1.5 trillion into the markets to prevent a meltdown. What's your view? Can they save the markets?
The short answer is no. They can do some things, but I would not overstate the power of the Fed. And this is it's an unfortunate aspect of really the last almost 25 years at this point, going back to 1998, when the Fed bailed out the banking system at the time of the long-term capital management crisis, and then again with Greenspan's rates too low for too long after the dot-com crash of 2000, 2001, and then again in the 2008 financial crisis. Every time there was a problem, the Fed came in, cut rates to zero, printed a lot of money, and seemed to save the day, even though things were bad for a short period of time. So the mindset set in is like, well, we can take lots of risk. We can use lots of leverage. We can use risk parity and passive investing and robot trading and all these things. And if we mess it up, don't worry, the Fed will ride to the rescue. Well, we may be seeing the outer limit of that. We may be seeing the point at which the Fed cannot ride to the rescue because they've used up all their ammunition. So what has the Fed done so far? Well, they cut rates to zero in 2 emergency meetings, including one last Sunday. Here's the problem. Anything has diminishing marginal returns. So what the Fed was trying to do, going all the way back to 2013 and as recently as up to the end of 2018, they were trying to get interest rates up to 4%. They were trying to get the balance sheet down to about $2.5 trillion to get ready for the next recession. And I said 3 years ago, and I've said it repeatedly, that they're not going to be able to do it. They're not going to be able to get ready for the next recession without causing a recession along the way. And that's exactly what happened. By the end of 2018, when the Fed raised rates in December, seems funny to be talking about rate increases, but December 2018, they increased rates. They pushed the U.S. economy very close to a recession. So first they went to pause, meaning no more rate increases. Then they went to rate cuts beginning in 2019. Then they got rid of quantitative tightening, which was reducing the money supply. Now they've gone all the way they've cut to zero, and they are doing quantitative easing again in an effort to stimulate the economy. But the problem is it doesn't work. It's not enough. If we're in a recession, and we may very well be, certainly we're in a severe downturn, historically you have to cut interest rates 4% to get the U.S. out of a recession. Well, how do you cut interest rates 4% when you're starting at 2.25 and now zero? You can't. You're out of bullets. And there's no evidence that quantitative easing works, and there's even less evidence that negative interest rates work. So the Fed used their bullets in 1998. They used them again in 2001. They used them again in 2008. They're out of bullets. This will not stimulate the economy. It's over to fiscal policy, which means deficit spending.
Okay, I don't want to get too political here, but what you've just described as the impact on the economy and then the markets, it's necessary to talk about. So let me put an image up here on the screen just to get your reaction. Okay, so what we're looking at here is from a political betting website. So you'll see before the virus, most people were betting Trump would win. But now most people think that the Democrat candidate will win. So what do you think? We all know that a strong economy was favoring a Trump reelection. You've talked and written a lot about that. So how do you think that this coronavirus crisis will impact the election odds now?
Now, I, got some kudos or some noteworthiness in late October, November 2016, ahead of the U.S. election. I happened to be on book tour around the world, and I was doing a lot of television interviews, and I predicted that that Trump would win the election. I was asked point blank by TV anchors, and I said that Trump's going to win. It's going to because this is about a time when Hillary was a 92% favorite to win, and I just said flat out Trump was going to win. I had the analytics to back that up. So here we are now, and as recently as 2 months ago, I was giving Trump a 70% probability of winning. actually a little bit higher, based on the economy, based on the fact that there was no recession. And it's just the case that in the 20th century, no president seeking reelection, so an incumbent president seeking reelection, no president has lost unless there was a recession. So people immediately go, oh, well, Jimmy Carter and George H.W. Bush, they were seeking reelection. They lost. Yeah, that's true, but they both had recessions. Carter, a really bad one, and Bush, a mild one in 1990, 1991, ahead of his election. If you don't have a recession and you're running for reelection, you win. It's just about that simple. There's a little more to it than that, but it's just about that simple. Well, here we were. What were the odds of recession 2 months ago? They were well below 20%. Some analysts had them as low as 10%, which means if Trump's odds of winning are the inverse of the probability of a recession, if recession is a 20% chance, then Trump's odds of winning are an 80% chance. And I had it at 70, but it was going to get to 80. Well, now we're in a whole new world. Now the odds of a recession are at least 50%, probably higher. Well, let's just take 55 for a number. If the odds of a recession are 55%, then and Trump's odds are the inverse, that means Trump's odds of winning are 45%, which means it's more likely than not that Joe Biden would win the election. Now, there's a lot of time between now and November. There are other factors in play. I don't want to put a stake in the ground, but all of a sudden we're looking at President Biden, and that has enormous. By the way, the market has not priced for that. Yes, you are showing the betting odds, and this is very up-to-date information. But the stock market's got enough on its plate with coronavirus and a recession. They haven't quite factored in the prospect of President Biden, but they're going to get to that, and that has huge implications for the market.
This is really what separates you. You know, we were talking before the call that your phone's been ringing off the hook since the market panic has started. But you've been talking maybe, certainly about coronavirus for a while. But before that, just the fragility of the market and the economy and how it could be anything that people aren't expecting or looking for that could easily cause the crises you've been illustrating in your books and in your other works, right? It's only now that there's a crisis and a specific name, coronavirus, that people start to pay attention. And that's a real shame. But in the midst of the market panic, the analytical method you use and the methodology, the model, has really helped guide a lot of different people. You have a small group of readers that have been able to take action in the midst of the panic. They've actually been able to make money during this panic. So given your outlook, what do you recommend people do with their long-term portfolio? How can they protect their wealth?
Well, it's a great question, Peter. And as you can well imagine, given the markets, my phone is kind of ringing off the hook. Obviously, we're very happy to be doing this for our readers, but I've also been getting calls from consulting clients and the media, et cetera. My wife teases me. She says, Jim, when everything's great, the phone doesn't ring, but when things fall apart, everybody wants to, get you on the air or get you on the phone or whatever. And that's fine. We do the best we can to help people in these situations. But this was one particular individual. He was a good guy, but he had lost tens of millions of dollars, very wealthy individual who manages other family offices. And when the market first went down after February 16th, that week when it was down about 3,000 Dow points for the week, he jumped in, got leverage, jumped in, said, listen to Larry Kudlow, which was unfortunate, and jumped in, used leverage, and bought the dips and got crushed, just got absolutely crushed. And of course, I talked him through it, and I said, I just wish you had called me 2 weeks ago because I could have told you this was going to happen. So I'll say the same thing now. So markets are repricing. This is what markets do best. They're inefficient in some ways. They don't do it perfectly, but markets get new information, and they move to a new price level based on that new information. The problem with coronavirus and now the recession, because as I described, these things are crashing into each other, is you're trying to hit a moving target. You're trying to reprice for an outcome, but you don't know what the outcome is. My expectation is the stock market's going to go lower. They're trying to reprice for something that's a moving target. They don't know how bad it's going to get. Good reason to think it'll get worse than people expect, and that's why I've been saying that all along, but I haven't changed my view on that. So I would not rush in and buy the dips. If you're out of the stock market or largely out of the stock market, that's fine. Sit on cash. You can always buy some gold. That's not 50%, not 100% of your portfolio. I've always recommended 10% in gold. People should have had that all along, but if you don't, this is a good time to get your gold allocation. But again, not more than 10% of your investable assets. Season to taste, as I say. If you like 5%, that's fine, but have some gold for sure. Beyond that, there's nothing wrong with cash. People go, I hate cash because it doesn't have a lot of yield. Well, zero yield is better than down 30%, which is what you're getting from the stock market. So people have become so conditioned to buy the dips. And by the way, from 2009 to 2020, if you bought the dips, you did okay. Every time the stock market crashed, it took a severe crash in August 2015. The stock market was down almost 20% between October 1st and December 24th, 2018. So we have seen these 10, 20, almost 20% dips before. And if you bought the dip, it came back. So people just have it in their heads, buy the dips, buy the dips. But there comes a time when it's not a dip. It's not coming back. It's a bear market, maybe a severe recession, maybe a depression. And you got to get out of the way of that. And by the way, if you've sold your stocks and you're sitting on cash and the stock market starts to rally again, I don't mean by the way, in bear markets, there are these spikes. You have these big up days in bear markets, and they're called bear traps. They sucker people in, and then bam, the market goes right back down again. We're not yet. We're not there. We're not at the point where you can confidently say we've hit bottom. Good time to dip a big toe in the water. Time to catch the next wave. We're not there yet. So I would be out of stocks, not 100%, but to a great extent, yes. Don't be embarrassed. Don't let people shame you about cash. Cash is good. It's always worth par. You're not going to lose money in cash, and you have optionality. You have dry powder. And if you miss the first couple percent of the next rally, who cares? I mean, you're not a day trader. Well, maybe some people are. That's fine, but good luck. But if you're in it for the long haul, if you're in it for your retirement, your health care, your parents' health care, your children's education, saving for a house, if those are your lifetime goals, you're not going to be set back by missing a couple points at the start of the next rally, but you will be set back by losing another 10, 20%, which could happen. So I'd be out of stocks, in cash, a slice for gold, not more than 10%. I'd be watching carefully, and then kind of get ready to catch the next upturn, but we're not there yet.
Hi, James Woodburn here, publisher of Jim Rickards' Strategic Intelligence here in Australia. As you've seen, Jim's been one step ahead of mainstream analysts through the entire COVID-19 crisis. He predicted it would be a global catastrophe in early February, well before markets caught the fever. So what does Jim see happening next? Well, as he just told his US publisher Pete Coyne, complete monetary system shutdown. At the end of such a scenario, the entire global financial system shuts down, and any Federal Reserve intervention may no longer be effective. It's worth pointing out that this is a scenario Jim has highlighted for several years as the bookend of this historic bull market. The difference now is it appears to be in motion. So what can you do to shelter your wealth here in Australia? Jim and his team suggest a variety of possible protection measures, and they've outlined them in a brand new financial pandemic shelter report now available to every Australian concerned about where we're headed. Simply click the link below this video and you can get access right now.